Today we're doing some technical chart analysis on the SPY, as well as looking at the Tesla chart, and a follow-up video on overextended moves. Welcome to Trading the Gap, everybody. If you're new here, my name is Mal. I am a trader and I'm an investor. I've been trading for some time now, and I have a passion for helping people. I really enjoy looking at charts, breaking down charts. When I'm not trading, I try to make videos to help people. And when I'm not doing that, I watch a lot of trading videos. It's something that I found many years ago, and over time, I just realized that I fell in love with it, and I just can't get enough. So much so to the point that I actually started disliking weekends, as weird as it sounds, because the market's closed. So the goal of this channel is to help beginner traders that are interested in trading get a place to start. If you don't know where to start, or if you're struggling, if you're just learning how to do market analysis or how to read candlesticks, the goal for me is to help you get started and to learn to make your own educated decisions so you can develop your own system. So today I want to talk about some market analysis. So I have a couple of things going on here. So first of all, we're looking at the daily chart. The blue line is my 20 EMA. The pink is my 50. And the orange is the 200 EMA. So typically, these are areas where price finds support. Lots of people use the 200 moving average as a confirmation for price, especially on a daily chart. So typically when people are trading, sometimes on the lower time frame, they will reference a daily chart, and they will actually split their screen in multiples or in twos. So on one side, they will have a daily with a reference of the 200 moving average, and then they'll have their trading time frame. So for me, this is just a reference. I like to look at the 200, and you can also see times where price has bounced between the 20 and the 50, right? So this whole area is kind of a area of value. This zone is an area of value where people trade from, and sometimes it works really well. Like here, it didn't even touch it. Here, we came down, and then we shot back up. So a lot of times people notice these areas here, and if price comes back, let me delete this. This is getting this is getting crazy. So if price comes back, a lot of people will buy the dip, right? This is called buying the dip, right here. So it didn't work here. We kind of broke through. We came back, and then we bounced off the 200, broke a little past the 200, and then we went up again. So the other thing I have, right, you could see the 200 holding. We had a bounce on the smaller time frame. On this candle here, what we actually did was we opened up below the 200, and then we shot up. So representing this wick here, got rejected and then sold off. But there's the open right there. So these moving averages I use just as a visual reference. In trending markets, the 20 and the 50 work really well. You could kind of see right here the 20 is holding price really, really well. And then we did dip below that once, and then we held it right here. We held it right here. And we're kind of, every time we come back to the 20, we tend to continue up. Same thing here. So in trending markets, it works really, really well. And it does not work in sideways markets, right? Sideways markets, price kind of does this, and then the moving average, it'll be flat. So it really, if the moving average is flat, it kind of tells you that we're very, very choppy. So the other thing I have on the screen is these white lines. Let's add that in. Maybe we can just edit this one. All right, and the white lines are supports and resistance. So how did I find these areas? So first of all, let me take these moving averages. What we can do is, if you're using Think or Swim, right up here, we can go to studies, and I have my studies here. So what you can do is click on the cogwheel. If you want to add them, by the way, they're on the left-hand side. You just type in moving average or exponential moving average. And this is all I'm using, this moving average exponential and moving average 2 lines. Instead of having 3 exponential moving averages, I just use a single and a double. And I experiment them. You'll see in my videos, sometimes I use them, sometimes I don't. I find that when the chart gets too cluttered, I tend to just remove them. And then when we're trending, I notice that we start respecting those areas, that 20 and the 50 EMA. And I don't always have that on. I can kind of guess where it's going to be because I'm used to, depending on the pullback, I'm kind of used to seeing them. But for visual references, sometimes I put them back on. So all you can do is show this plot here. The fast moving is the 20. Slow moving is 200. Take that off. Click OK. And then we're going to do the same thing with the 50. And then we just click OK. Those disappear. So now we got what they call a naked chart. So this is just price action. And I have support and resistance lines. So this is the S&P 500 ETF. You can see up here the spider, SPY ticker symbol, and spider is right here. So how did I find these lines? Well, I like to pick most obvious places first. So the first thing that sticks out to me, this high here, and this high here. So if we were to draw a line right here, this is an arrow, but let's pretend it's a line. See how price gets rejected? So what we can do is let's clean this up. All right, so now we have a regular chart, and this white line is just where the last price action was. It's just a visual for me to help me figure out where it is so I can see it better, so I don't have to look all the way to the right all the time. So starting from a naked chart, if you're just trying to learn how to place support and resistance lines, we have an area right here, and there's actually 2 here, which is a double top. So if we were to go to our line tool and we were to draw a horizontal line right here, that's a little bit low. So this would be your resistance. You can see that 4 times price got rejected off of this level or close to it. So normally resistance is not a line, it's an area. So this doesn't mean you want to buy or sell. What this means is you want to see how price reacts in that area. In the future, you can expect price to react off of that level. So we came up here, got rejected, pulled back, came up again, got rejected again. Then we had a much deeper pullback. Then we came back a 3rd time, got rejected off that same level. Then we had a very small pullback here, came back, double topped, by the way. And then we had another retracement. So if you trade double tops, I typically don't trade reversals. I mostly trade breakouts, but I do trade double tops and double bottoms. I talk about it in my video, but not very often. So the entry was right here. Same thing here. If this is a pattern that you take this to the downside as a breakdown. And then what did we do? We came up here. See how we broke through? Let me see if I can zoom in. So we broke through. If I zoom in, it's going to mess my chart all up. So we broke through here, and then you can see this couple of candles came back and retested that same area, and then we kind of took off, right? So you could see what happened. So this is how typically support and resistance works. What once was resistance, once it's broken, usually gets retested as support. Now, support and resistance areas are broken all the time. This is why I say this is not a buy or sell signal, but it's a good area to keep in mind, to keep an eye on, to see how buyers and sellers react. So this one is just a price level tool. You can click it here and this will plot it. And then I also use a drawing tool for the screen to help visually. So another area I see is right here. See this top? So if we plot this here, what am I looking at here? I'm looking at right there. We kind of had a breakthrough right here, but there was still reaction at that level as well as this level right here. And of course we closed right on, and then you can't miss these two, that one, that one. Okay, so you get the picture. See all these little ones? There's also a little bounce right here as well. So pick the most obvious areas. And so one thing you do not want to do is you don't want to dry everywhere, because there's a reaction here, there's a reaction here. What you don't want to do is do this. There's a reaction there, right? There's one here, there's one here. Don't do that, right? So then you don't know where to trade because you have too many lines. All right. So I erased all that. Typically, what I do is I use the most recent price action first. If you go right down here, if you're using Think or Swim, if you follow my mouse, I changed it to a light blue color so it's easier to see. You can actually hold the left mouse button down and scroll this, and it'll scrunch the chart up. And you can also use the zoom in and the zoom out, but I don't like it because it throws me off. Everything moves all over the place. So what I typically do is, if we're trading somewhere up here, I will find a price level like this. I'll find a price level like this. And then, of course, this tippity top, which is going to be a long time before we come back to there. So we don't really need that there. So we can just remove that. And all I did was just right click on the price level and then go to remove. So what you want to do is use the most recent price action first. And one thing to keep in mind, support and resistance on higher time frames will always be weighted more, right? They're always going to be much stronger than on lower time frames. So let's say support on a daily chart is going to be much stronger than support on a 1 minute chart or a 5 minute chart. This is typically how the process goes. Pick out the most obvious levels, plot them, and then see how price reacts. All right, so this is SPY. What I really want to talk about is Tesla. We go right up here. Ticker symbol is TSLA for Tesla. And let me zoom in. About a month ago, I made a video called Overextended Moves and Market Prediction, making market predictions. So Tesla was right about there. And I had talked about how it is extremely overextended. If we come up here to the time frame, go to the weekly chart, this is what we seen on Tesla. I think this candle was a little bit, I think the close of this green candle was much higher, but it was very, very extended. You can kind of see this is crazy. So I talked about being careful in buying Tesla if you're looking to buy or invest. And one of the levels I seen that sticks out was right around here. Now, support and resistance areas are broken all the time, and they kind of change a little bit because, in my opinion, most recent price action, I would put more weight on that as support and resistance, meaning that if all we had was this candle here and then this doji candle, the structure would be here for me, but then once it's broken and we chop around, then you want to find the most obvious level. And so I might change this a little bit. What I might do is, instead of placing it there, I might move it up to here, because now we have a most recent bounce right here. These areas are not to be taken as buy or sell signals by themselves. It's just an area to see if buyers or sellers are interested, right? And then make your decision from there. But a month ago, I made a video talking about how this was way overextended. And I said that, let me get my pencil, and I said I would like to see a pullback and then some kind of a chop around. And then depending on what happens to the S&P, we might go up or we might go down. I also cautioned people not to buy. I believe the market was right about here somewhere. So right here, this candle, or this candle, I know that My prediction for the stock was for it to pull back to the at least the 700 level. And now if we delete these, we are sitting roughly on 628 level. So this is actually a good buying level. Again, if we're looking for support and resistance areas, I see this top here, this top here. So I would put my area somewhere here. Roughly, here's another one. And then, of course, this is kind of tough. There's a lot of gaps. You have to be careful placing these. So what you can do is, if there's not enough information on the daily chart, go down a time frame. Go down to the 4 hour. If I'm not sure what I'm looking at, go down to the 4 hour, and now you can see it a little clearly, and we can start over, right? So if we delete these lines, we can start over. The first two are very, very obvious, right? You have area right here and a bounce right here. So why did I place the line on the body instead of the wick? Well, simple, because of this second confirmation bounce. We also have an area right about here. We broke through it just a hair, and then we skyrocketed. So this would be, for me, this is how I would look at it. If you want to look at it in terms of an area, I would go from the bottom of the body here, right, to the bottom of the wick. This would be a support area. Same thing with this wick. If you like to draw areas, which I know some people do, what you can do is go from the top of the wick here, right to the body. So that's all I did. I take my box and we go right from the top of the wick, roughly, and we just draw a support and resistance area. So that way, when we zoom in, you know that it's an area. Or you could just place two lines as well. Right? So if we take our drawing tool, you can place two lines. Some people make them dotted. Some people do this. What you could also do is go to the tools over here, and I get my rectangle, and you can just draw a box if you're looking to trade this. And then you can come over down to your, let's say, 15-minute time frame or whatever you like to trade. I don't even know if it'll let me. Let me see if it'll let me scroll that far back, 90 days. Let's see if it'll let me scroll. So here we go. That's the top triangle that we drew originally, right? So here it is, and you could see actually a giant pin bar right here, right? So this pin bar represents rejection of lower prices. So this would have been a good area of value to potentially look at buying. And the same thing, if we scroll back, you can see multiple reactions off this level. Right, so this is one way to trade. Everyone has their own style of trading, but if this is something that you enjoy, these support and resistance areas provide lots of information about who's interested, if the buyers or sellers are interested in that particular area. So we had this pin bar right here. The other thing that I noticed is we had a double bottom as well as higher lows here. So if you do trade double bottoms, we make this move here, we come up, we come back down, and we don't even get to retest this previous low, and then we start curling up. So this is telling me that we have a double bottom breakout potentially happening. So if you were trading this, if you do trade double bottoms, this is how we would trade this. The entry would be on the blue line, stop would be right here, and this is how we trade this. I trade double bottoms myself. I trade pin bars, which shows us rejection of lower prices. And this is on the 15-minute chart. So depending on your style, what you could do is you could either plot support and resistance on the daily, or I like to plot it on the 4 hour if the daily's a little too messy. And that is how I typically do it. All right, this video is getting very, very long, so I hope this helps. I'm going to stop it here, and I will see you in the next video. I hope you enjoyed this video. If you did, hit the thumbs up button, telling the YouTube algorithm that you enjoyed it, that there's quality content in this video, so it can get recommended and help more people. And also, if you don't want to miss the next episodes, hit the sub button, hit the bell icon. YouTube no longer recommends every video just because you're subbed. So if you don't hit that bell icon, you're going to miss videos. So if you're enjoying this and you want to follow along, go ahead and hit the thumbs up, hit the like button, and I'll see you in the next video.